Today, we'll be looking at the price of corn in the futures market, discussing the question, is corn still a good investment in 2021? It has actually doubled in price from just a year ago. Pretty insane. And now it's approaching those all-time highs. Again, up here, we'll be drawing out some key levels, basically just breaking this price down on the 1 month time frame. A lot of the other assets, we talk about global investment sectors on this channel that we cover are pretty new, especially in the blockchain space during this bull run. I've been covering a lot of very new projects, but it's vital. That's why I always start my day off with commodities, because it's the longest, time tested asset class, especially gold. Then you look at silver. And then I'm looking at main commodities for EV infrastructure, so electrical vehicle batteries infrastructure and 5G technology. So when you look at things like lithium, copper, nickel, cobalt, platinum, palladium, I'm also looking at those two metals. Uranium for more of the nuclear energy play in the green energy space is very compelling in my opinion, especially when you're looking at uranium and lithium. I've made individual videos on these commodities, but I haven't talked a lot about the agricultural sector, and I'm very, very currently bullish on cattle, actually. Now, some people may go, what the heck? What does that mean? Like, you're bullish on cattle? Well, look at the overall price for cattle. And if you really dig into the narrative, I talk about this in the global investment framework video, which is linked down below in the description, how you have to identify the narratives with each of these things. What I think a lot of people don't realize, and while I discuss this, I'll be drawing out these key levels, by the way, just some support and resistance for anyone who's new to technical analysis, laying these out while I kind of discuss this macro. So I think what a lot of people do not realize is there's this massive problem when you have kind of these, guess you could say, blue collar worker that is working at some of these either meat packing plants or on a farm, and they have to be in the kind of doing the dirty work with a mask on. Like, and this is not a political statement. This is just looking at the narrative. Like, genuinely, I'm just looking at this objectively, and this is a massive problem. People are getting paid more to sit at home because of unemployment than they are at a meat packing plant or on a farm. And I think this is a huge, huge problem, especially when you're looking at, okay, the inflation play. Like, look at all commodities. Lumber has gone up ridiculous, almost to 3x in lumber prices. And then you see the things that are kind of dragging behind as we kind of are moving. Obviously, we're already in summer, but as the summer progresses here in 2021, I think we could see some very interesting things with commodities. And, we could even see a situation where, a lot of stocks fall, but commodities rise, and see a little cycle with commodities. Gold, silver, I've been talking about these a lot, like especially owning physical bullion, I think are pretty safe bets currently, especially when you just look at, okay, what are all the different sectors you could invest in? Well, commodities look pretty great. Emerging markets look pretty great. Obviously, crypto is in this bull run in the blockchain space currently, so you are kind of buying it a little bit of highs, but I still think there's a lot more room to grow in that sector. But I think especially for commodities, if you identify something like this, around this level, just here in, what was this, like October. Yeah, if you would have just been looking at this in October of 20, which, I mean, I've been tracking the price for this. I don't trade corn futures. Some people are commodities traders, some people are forex traders, stock traders. I do trade some commodities, but corn is not one of my specialties. I am very, like I said, interested in cattle. But yeah, you can see just exactly what's going on here. It's pretty crazy. So, like I said, you do have that narrative where people, like the workers, it's hard to explain without actually visiting one of these factories. But, I'm actually back here in the United States. I was in Turkey for a long time, and kind of throughout the Balkan region, but I did return back to the United States for a funeral for family members. And I grew up in Iowa in the United States. And anyone who's familiar with kind of the Midwest, Iowa is one of the biggest corn states and really one of the biggest farming states in America. So I've met with a lot of farmers. I know a lot of farmers. I know a lot of people that raise cattle. And basically right now is a very interesting situation. Just like actually one of my family members that I saw at the funeral works. He does like woodwork. So he does like this really, really cool like custom woodwork in Missouri. And he's seen the lumber prices go crazy. But the beautiful thing about what he does is he doesn't buy lumber from a lumber mill. He goes out and gets his own lumber. So like that's literally what driftwood is. I'm assuming if you're following along, you understand probably what driftwood is, right? Like it's floating down a river, and it's like this basically premium quality wood that you bring back, dry out, and then you can create custom furniture and stuff like that from. So the point is he's seen this crazy rise in lumber. Farmers are starting to see these crazy rise in things like corn, but it's a double-edged sword. So if someone was shorting corn in commodities futures, you're going to get pretty destroyed, honestly. Like that's why it's like playing with fire when you're trading commodities. Really, when you're trading anything, any futures. So when you're not trading spot, there's an inherent obvious increase in risk, right? Like you need to know what you're doing. You need to know technical analysis, and you need to understand why I just drew out all these lines, right? So all of these lines are never exact lines. These are always ranges. So when you start getting a little bit better at technical analysis, you can just, when you look at these, you can see them like this. So you never have to draw out a rectangle, but when you're looking at the chart, this is how you should see each of these lines. They never represent just a flat line. Rather, it's always a range like this. Okay. So, for example, with this line I was drawing out, it was that kind of level. And here with the support and resistance levels, these are very, very important because we can kind of gauge now where this is headed. If we pull this out a little bit, we can see these all-time highs. We do have kind of a situation right here. Let's see. So it's kind of, so like what I would do is draw out a rectangle like this. I would go here, those kind of the levels, and then like this. Because you see the wicks, you want to kind of draw them at the top of the body up there, and then that all-time high where it wicked up is right there. So since we're just kind of looking at those key levels, if it can break past this, if it doesn't get rejected and dumped down here back to previous support, so since it broke this support level, this resistance level, now it's new support. So let's say we're looking at the price, and obviously this is a macro view because it's literally on the monthly time frame. So if we go down to the let's just go weekly, and I can show you this a little bit better. Here, I'll move my big head right here. Let's see 1 week. All right, now if we're looking at the 1 week chart, you can see this just a tad better, but you have seen how we're in this pretty parabolic rise, right? Like this parabolic rise is, let's just say you were doing a nice long position here and you identified the trade, even if you were just doing a macro trade and you were using like Fibonacci extensions, that's pretty great gains, right? And that's just on the spot, right? So these percentage, you get 140% gain from there is trading spot. You add 2x leverage, you have 280% gain. You can do the math from there, multiply it, 10x leverage, you're at a 1,400% gain. So it's not just crypto, guys. And I know a lot of people watching this channel are just familiar with the crypto space, but that's why I think it's so important to also look at commodities, look at things that you actually like obviously, yes, crypto will stay around in my personal opinion, but people that are worried about food are not worried about crypto. Like people that need corn, I think so many people just don't understand that corn is actually used in pretty much every single thing we use today. Look at ethanol, look at sweeteners, even soybeans. Cows or cattle in general are fed corn. They're corn-fed cattle, typically, if you're like doing an organic farm. And on the global level, that's the majority of what they feed cattle. So corn has so many different use cases. I think so many people don't realize this, and they just go, corn out of a can is how corn is served. They don't think about the inner workings of this. And that's really what I like talking about on this channel is kind of more of the inner workings of these investments. So you can kind of build your own thesis. That's why I love doing boots on the ground research. Like if you're interested in corn, go to a farm. Don't look it up. Like I obviously do these videos online to look at the charts because you're not going to go to a farm to look at the price of corn, right? You should understand that going to the farm. But I recommend, like I grew up visiting farms. It's interesting because you get to kind of have this perspective on investing as a farmer. Every single time, every single season, they're investing in their new crops. And the crops haven't grown yet. There's no promise that the crops will grow. Rather, you invest in the seeds, you invest in the equipment to have the most successful chance, the most highest probability of creating a successful crop. So every year you're doing this new cycle of investing. So, if you're someone that's struggling with like hard work, things like this, go work on a farm. I'm dead serious. Like people that just go and work on an Amish farm for like 6 months to a year, things switch in their brain. Things really switch. If you're struggling with that, that's what I recommend. Genuinely, just consider it. Some people are like, oh, I should join go on some quest. Go to a farm first. Figure out what life really is all about. How all life really started. When you look at the book *Sapiens*, it's an incredible book. Hunter and gatherers. But then when corn came in, it really changed the whole way we live. Literally, corn and wheat changed the whole way we live because then you had stores of value. So then you had resources. And basically, before this, it was hard to preserve everything. If you're just gathering and hunting, then you have crops, and then you have reserves, and then you can start building on top of more things. So interesting as far as that goes, just to look at coin production listed by country. So the US obviously is number one, right around weighted in 1,000 MT, so 360, 252. Then China, Brazil, EU, Argentina, India, Ukraine, Mexico, South Africa, Russian Federation. I thought the Russian Federation would be a lot higher. That's interesting. So the main thing here, guys, is whenever I'm looking at an index like this, I always cross-check it with multiple. So I have, for example, I always look, like I said, I kind of use like the daily metals chart. It's like called daily metals market, just to kind of have the macro view in the morning, exactly what I look at moving into the markets to analyze, okay, what's cheap, what's expensive, look at that first, and then go, okay, let's analyze each of these kind of separately, and then pick a play, whether it's shorting something that's expensive or longing something that's cheap. That's kind of how I look at things on a day-to-day basis. That's kind of how I structure my day, is looking at these macro factors, and then you can kind of keep narrowing it in, and then identify a play, go to the daily time frame, go to the weekly time frame, go to the monthly time frame, and then when you're looking for an entry position, you can use something like the hourly time frame and the 5-minute time frame. I have a video called, I have a series called Global TA, which is basically a free technical analysis course where I talk about things like these basic things in the charts. Like this is pretty clear to me that this would have been a good entry position, especially if you're a commodity trader. You can see this kind of a long. Like I was saying, so Global TA is basically this free technical analysis course where I go over basically things that a lot of people are trying to charge like a ridiculous amount of money for, and just go over how to make money trading, basically using key things like this, like just a simple trading pattern. Like if you just look at this kind of you could draw it multiple ways, but this is kind of like a descending triangle consolidating in this place where you're seeing lower highs and the lows are staying about the same. So you have a low touch point there, a low touch point there, two low touch points there, kind of forming a W. Then this would have been a perfect breakout trade, literally out of this triangle. You can kind of see this W where it was a low or a higher low right here. So this is personally where I would have entered, because I'm looking for multiple points of confluence. So you can see we're in this descending triangle. We kind of saw this fake out here. So a little bit of a fake out. You could draw another little pattern there if you wanted. But the point is this macro descending triangle. Again, this is on the weekly time frame, obviously. But we saw this fake out, kind of push back down into the consolidation pattern. Then you saw W with basically a higher low right here. And also right on this, remember, that's why we draw out support and resistance lines. It's right on that basically support line. You have this massive push up. So this would have been an interesting breakout trade once it crossed this neckline here. So a long position, just like I showed you before, right about here with probably a stop loss of, I would have set a really close stop loss, because if it came back to consolidate in this pattern, most likely it would dump down at that point. So I would have set a really tight stop loss, like maybe let's just say you're doing 2x leverage. This creates for a situation where you could have a nice entry point, low risk, very, very low risk relative to the reward, because you can see, let's just say you would have pulled profit here. So 2x, you would have 50% gain. And like I said, let's say you would have pulled 50% of your profit and let the rest ride. Sterling, no, sorry, I have a dog with me. Sterling, no. Let's just say you would have let these profits ride, setting a trailing stop loss. So essentially having this ride up with you, minimizing the risk of having a downward pullback and making sure you're always staying in profit. Then you would have around 100% gain. So with 2x leverage, again, 200% gain. You get the point there. So when we're looking at corn over here on MarketWatch, you can see it's about the same. So again, commodities trading is a little bit more of a complicated thing. So if you're just starting out with technical analysis, I recommend just paper trading. Go watch the Global TA course. I have that link down below in the description. Maybe test out trading on just using spots. Like for example, with crypto on Binance, you can just trade with spots, or Bybit, Femex. I have links down below for those as well. Just some exchanges I recommend if you're interested in doing margin trading. Make sure you know your proper risk management. Make sure you study that Global TA course before you trade. Test out your strategy using paper trading before any of these things. And then if you're interested, you can bring it to the commodities market. But this is much, much more different market. Like you really have to study this. That's why I'm in it every single day, because I know that there's people with 30, 40, 50 years more experience in this stuff than me. So I'm working my ass off every day to compete with them. Basically, I'm interested in these things and just studying these markets. So besides that, this is an interesting article. I'll have this link down below. I never take these as news. Like I always look at mainstream articles like this from a different aspect. I don't look at them to extract information necessarily, but I look at the macro of it. So a lot of people who follow the Wall Street Journal read these things, and they form their own opinions based off someone else's opinion. I try and never do this. I try and look at the objective facts and apply basically a scientific method of thinking. So thesis, antithesis, synthesis. It's an ongoing cycle. The synthesis is the new thesis. You should be constantly testing what your personal beliefs are, what your ideologies are, so you can constantly be improving them. Always try and iterate and improve. This should be an ongoing cycle of improvement, of really having the best ideas win out, getting rid of the rest, and bringing in new good ideas. Keep this cycle going, and that's really how you innovate. That's how you stay up with the times. And when you see something like this happening, you should not take the Wall Street Journal's opinion as fact, right? You should look at this as kind of sentimental analysis. It literally doesn't even matter what the article says. Doesn't. Just for example, maybe this is a good article, but let's take this from that point of view. It doesn't matter what they say. Look at exactly what the headline is. Most people just read headlines. You have to realize it's like 65% of people that read the news literally just look at headlines and then go on like some game or something like this. Not a lot. And maybe you read into articles. I personally do. Like when I look for deep reading material, I will like read things that are like a ridiculous amount of pages long. I never, like an article like this is so short. This is like nothing, but the point is, people just mainly headline read in the media, and you can look at that from the sentimental perspective as people are seeing this and maybe it's starting to cause some panic. Maybe other media organizations will kind of pile onto this. Maybe some people will counter argument. The point is looking at this kind of the contrarian view, right? Most people look over here. They have the shiny object syndrome of what the media is telling you. You should look at, okay, look at this whole situation up here from a bird's eye view. Look down at this situation and go, okay, what is going on here? What's really happening? Let me apply what I learned from this into the investment markets, allocate some capital towards something like, if you have a thesis on corn investing, you can become a commodities trader. It's a little bit complicated, not going to lie, but maybe I can make a separate video on this. Obviously, not investment advice. You have to do your own research clearly, but I'm just trying to lay out some information here, some things that I've been thinking about over the past couple of days. That's pretty much all for today's video. If you enjoyed it, hit the like button, subscribe to the channel, hit the notification bell to stay up to date because it's time-sensitive content. That's all. As always, invest global. Let me know in the comments what you think about investing in corn for 2021. As always, invest global, and until next time.